These signals should not be showing up if we are in a macro bear market, if we are getting a recession, if the world should implode in 2023. This is not an April Fool's joke. I don't have an April Fool's joke for you today. Maybe I'll leave that for tomorrow. But for today, we have fresh new green plans and fresh new green signals on the chart. That's my dad joke at the beginning. Let's crack on with it because you guys have done a fantastic job yesterday smashing up that like button, even though many of you didn't want to. So thanks very much for that. Here's a nice screenshot of me like that. All right, this video today, we're looking at Bitcoin, we're looking at the S&P, we're looking at NASDAQ. We are looking at many different signals showing up green after green after green. I am shooting myself in the foot here talking about how bullish the market looks at the bottom of the market. These are huge lessons that I should have learned during the peaks when we were looking at the markets potentially falling at the peaks. What happens at the lows? People don't want to hear. And I guess you just being here is a pretty massive piece of the puzzle, because at the lows, as I've learned throughout my history in the markets, now coming up to 17 years, this is what people want to see at the lows. They want to see major recession. They want to see people helping them out of these recessions and bad times to come when all of the news is absolutely destructive. At the lows, you will never, ever hear good news. Never, ever, ever hear good news. And at the tops, you'll never, ever, ever hear bad news because this is just the media cycle. So today's video, I want to show you some more of those signals that keep showing up. The end of the quarter is here. The end of the month is here. The end of the week is also here for March. And we've got some pretty big stuff to get through in our analysis. Like I said in the title and the intro, this sort of stuff should not be showing up if we are in fact in a macro bear market that is just getting ready to destroy the bulls. Now, I will turn bearish when things get extremely overheated. I'm more of a macro play, so keep that in mind as well. I want to trade the markets the way I see fit, and I hope you do the same thing. Be malleable in your views of the market, but when you see those signals early on, take them and take them hard because you don't get those too often. All right, let's start off with the dominance chart. We have skyrocketed since middle of March here. You've got the low here at the 10th. We're all the way up. And if you're familiar with some of these patterns when it comes to flags, you've got a pretty vertical flagpole here. And here is your tiny little flag at the top. Nothing too serious where it's reversed and rejected too far. So this is pretty much a pretty strong bullish pattern. And you're just starting to see the Bitcoin dominance break out again. So this is a good sign for Bitcoin, of course, continuing to take some of that dominance back from the altcoins, which just keeps pushing that Bitcoin market up. And the importance there is that we start to hit some of those major resistance levels. We need to test those levels to see where the supply comes into the market so that we can get a reading on how bullish or how slightly bullish or maybe how bearish the market is. That's why we want to see this go up for the bulls. And for the bears, you definitely want to still see this thing at least hold its ground. It's not as important so far, but for the bulls, it is important. The reason why it's not as important for the bears is because this can keep going up in a bear market because everyone leaves the altcoins and you see the dominance on Bitcoin increase as well. But this is important now for the bulls so that we can keep gaining and keep trying to test those higher prices on BTC. The next thing that we have is the stock market, the US stock market. Now, I've got heaps of stock markets to check as well, but I'm going to leave this for another day and mostly for our premium members as this makes up the holistic view of investing. This is what we use for our overall macro picture for the markets, going through world markets, France, US, Australia, Germany, UK, Asian markets. This is what we do on a weekly basis with our members. So if you want to get involved in that before the next bull market really starts to pick up and you start to see some of the stuff earlier on, check out the link here, TIA Premium, or join our free crypto and economic report here, top of the video description. You've also got a free TIA community that you can go and check out a few things there. Okay, enough with the shills for now. This is what we have at the end of the month for the stock market. The highest close in 12 months. Highest close in 12 months. Some of you may also be looking at this little signal here. as we get a whole lot of lines on the chart. You can see the inverse head and shoulders just show up here on the monthly chart. That is pretty bullish, especially if you start to break through that neckline. This is the neckline right here. And you can see that we've had the highest monthly close so far, which is also closed up on the quarter, which is just more momentum. Remember, we were talking about October most likely being low. We weren't sure, 100% sure at the time, but it looked like a pretty good signal for the low, especially as September came in and we bounced away from that point. We also talked about there a low coming in March or potentially early April. Now that March is over and we're starting early April, it looks like the low has come in for March. This is stuff that we called in advance. This is not in hindsight. This is based on time cycles. You guys that have been following, you know about that. You've mentioned it in the comments before. This is all sort of stuff that we call in advance based on history, whether it's 10 years, 20 years, 60 years, 100 years. That is part of the data that we follow, and we follow it quite closely in TIA Premium, and that's on our weekly calls. So this is all in advance. This is essentially what we're expecting if the bulls were going to take control. If the bears were going to take control, of course, this had to break down. This October low must break down. While we remain above that October low, and this is good for all of the markets, including cryptocurrency, the US stock markets must remain strong because cryptocurrency is risk on. This stuff is essentially risk on, but it's far less risky than crypto. So you want to see the less risky stuff take off because that then leads more people into the riskier stuff, which of course is cryptocurrency. It's not my opinion. It's just what the market tells us. So we called for the October low. We're looking at June also being a potential low, a significant low, which it has been. This is just based on time cycles. So it might sound like I'm saying, look, we called it. It's basically based on time cycles, which are known in advance. So moving forward, we have March. We've got a pretty good volume here. Nice volume to this low, nice strong close, highest close in the last 12 months. Pretty damning stuff. Like we've called for before, 4,200 points is really going to be a nice key level to break above and consolidate above. And this is going to peg probably one of the final nails in the coffin for the bears. Remember, I'll always flip in the macro sense when I think things are getting too hot, and I think that's probably going to come somewhere around 2025, 2026, maybe into 2027. But after that, I'm going to be looking towards the bears. I think things are going to get overheated, so I won't just remain bullish forever. But I think that's, in terms of the timing, I think that's where we're going. NASDAQ also closing so high, it's unbelievable that 3 weeks ago, Silicon Valley Bank collapsed, which was basically this low right here at the low in March, bang on the log downtrend for the bear market of the NASDAQ. Here is that top there in November. Here is the low in October, the significant low in June, another higher low in late December, early January, and then this next higher low in March. It happened again. I can't believe that it happens, but then at the same time, I can believe that it happens. This happened 20 years ago, almost to a T. We had that low in 2002, then the higher low in 2003, and then the markets start to creep up from that point. This time around, the month is closed out. We're at very high levels. This was Friday's close above all those previous tops. It came to the double top, tried to push back, and then just pushed on again. 1, 2, 3 days up. This is looking relatively good, especially as we break out of the 50% extension here, heading towards the 13,600 to 13,800. As like with the S&P, a break above that level, that is going to be really good for the rest of the market. So above this 3,800 level, and then find support at this next resistance level and above the previous resistance levels. So somewhere between the mid 13,000s and 14,000, that is going to be a nice safe spot for NASDAQ to consolidate. Bears might take over. Maybe they start to push the market back down again, but we don't want to see it get any lower than the March low, and more importantly, the October and December, January low. Okay, so these are the key areas there. It looks like we're heading towards this resistance level to test it. That's a good thing there. We need to test. We will get pullbacks. Bears will come back saying, you were wrong, yada, yada. Okay, let's not worry about that because the macro is still up and they will have a few days here and there on the way through. US dollar, still not able to push any higher, which of course is good for Bitcoin, because if the US dollar is weak, then the rest of the commodities also start to head up as well. So this was another one of those calls that we looked at the peak here in late September of 2022. Let me know in the comment section if you were around back then. This is 6 months ago now. This was when everything was crazy. The news was calling for a collapse of the euro, the Great British Pound, buy US dollars. It's the strongest thing ever. And look what's happened from that point, down 12%. I think this has still got further to fall. You'll still have the macro bears saying that we're bouncing off major support here at 100, 102, and we're going to head up to new highs. I can't see that happening yet unless it consolidates above 108. All right, we didn't get back above that 50% level at 108. And then it can start to mount an attempt at that next high. But for now, US dollar is looking very, very weak, which is, of course, good for the bullish case in BTC. Now, this is another chart that we've been following a fair bit. It's a Wyckoff method. I will do an update of this probably in the next week or two, so stick around on the channel. You know what to do, like and subscribe, because this is the next major piece of the puzzle as we head into phase 3. I want to get just another 1 or 2 weeks of confirmation on this chart, and then potentially we can put it to bed and say that the accumulation has occurred for Wyckoff, especially if we get over around the 50% level, which is around $42,000. Do I think we're going to get there tomorrow? No, let's hold our horses. We still need to test the low to mid 30,000s as well. So it's coming to an end. It's not there yet. It could be another few months. Let's wait and see. Maybe we have to bring it back out again. But for now, this is working to a T. It looks like we've just pushed through into phase E as we look at BTC right now. It is now at $28,600. And maybe you've come here to have a look at my thoughts on April, an April forecast. So we've seen 1, 2, 3, 4 months up from the low. They're not all green months. They don't need to be. We're looking at swings here where the low price is and where the next high price comes. So 1, 2, 3, 4 months. March has been a phenomenal month, pushing down, putting another swing in the chart, putting a higher swing bottom and breaking out to the upside, which is why I think April may be the month that we come up to test the 30,000 and the low 30 area. So about the $32,000, which is previous lows and support of January 2022. You can see that was 33,000, but we have a 50% level at 32,000, 31,800. So call it a nice round number of 32. That is going to be a key area. Then we have the midway point between the high and the 0 point. So 69,000 is the top, all the way down to 0, halfway is 34,500. So there's a lot of resistance on the way up to that 40 level. So somewhere around the low to mid 30s is going to be a key area for Bitcoin to overcome, potentially in April or May. So that's the price targets. The timing is the most important. Don't worry about if someone's saying Bitcoin's going to 40,000 this month, it's going to 50,000. Piss those people off. They don't know what the hell they're going on about. That is going to lead people astray, especially when the bull market comes and it's like, it's going to 100,000, it's going to 300,000. Get rid of those things. Those things will always make people broke. What we need to focus on is the timing of the market. The timing. People often say it's impossible to do. Hopefully you've been able to see it on the channel now for month after month after month. It's not impossible. I might not always get it right, but it's not impossible. And it's the best thing to focus on because it's the only thing we really have control over. We don't have control over how far the market can be pushed up in terms of price. We have some targets in mind, but the time targets are really, really important. So how much longer do we have to go in this move? I think we're potentially coming to the end of it based on what we've seen in the past when the market hits a significant low and then pushes away from that significant low. You can see here from the 2021 bull market where we had that first pullback for a couple of months, we had 5 months up to the next top. Yes, they're going to be red months in between. No, we're not worried about that right now. We want to know how long does the move last for? And in this case, it lasted for 5 months from the June low to the November top. So when we get an idea of how many months there are, then we can start to project where that time pressure comes in, just like we would with price pressure. The time before that, so from the COVID bottom to the August top, and we just had that first little pullback before the market took off. That was 5 months as well. So there was enough energy in the market. There were enough buyers in the market to push the market for about 5 months from a very significant low. We are timing this from a very significant low. This is going to come down to your interpretation. My interpretation is that the FTX collapse is a very significant low, just like the COVID pandemic. And this is for the charts. Of course, it affects everyone differently. Forget that. We're focused on the charts here. Then we had the December 2018 low, very significant low because that was the cycle low. That was the bottom of the bear market. How many months could it go up? 6 months in this case. And it really only started to take off from this green month here, so about 4 months. So from the low to the top is 6, but then from the first green month, it's about 4 months. All right, let's take the cycle back again to 2015, 2016. You can see here we have 10 months. But if we take it back to the first peak, that's 3 months. And then the market started to move out on the 6th month. So basically, I'd look at it in terms of a number 3, which we've surpassed. And in this case, we went to the next top, which was 10. So half of 10 is 5. So we always look at 50% levels as well. We do that in time and, of course, in price. So this is leading towards 5 months. 5 months from the low of November, probably somewhere around May. That doesn't mean we're going to be running hard 40% months every single month until May. It might just mean that's where we start to roll over at the top. And maybe you get something like what happened here in November of 2015, where it pushed up early in the month and then closed a bit lower and then went sideways for 1, 2, 3, 4, 5 months and then pushed out for 2 months. Okay, so we're just getting a timing here of how many months. Go back again, 9 months, half of 9, 4.5, 4 to 5 months. That's what we've seen already in the past. How many times now? I think about 5 or 6 times. Okay, so we got a 9, we got a 10. Half of that is this here, this here, this here, and now we're into this stage here. So 6 months would take us out to May. 5 months would take us out to April. So I'm focused on this month and the next month, so the next 2 months total, as to where does price get to. Then that will, here is the absolute secret of the markets, that will then allow us to understand whether we're able to mount an attack at the next resistance level, or if we're going to go sideways underneath a previous resistance level. What the hell do I mean by that? Well, if we start to break in the next 2 months, because I think we only have 1 to 2 months left of pressure for the bulls before the bears take over again, 1 to 2 months left. If the bulls have enough strength to break above the resistance levels, get into the 30s, the mid 30s, then, and only then, if we're able to hold these levels for that period, we're able to then mount another fast attack to $40,000 to $50,000. But if in this next 1 to 2 months we test it and fall under it, then we're probably left trying to mount another attack between 25 and wherever that top is. If the top is now at 29, if the top's at 32, that's the area that we'll start to reaccumulate in before we can mount another attack, who knows when, the next couple of months from that point. That is a little bit of a bit difficult for some new people to swallow, but that's how the markets work. It's how much time do we have left? Where do we get to at the end of that time? Then we can start to build another attack. Just think of it like an army at war. They have so much manpower to get forward in the line to try and take over that land. If they can get further forward and take over the next base, then they have that next area that they can create a structure from, maybe start to bring in some more supplies and then move forward from that point. But if they get rejected at that point, they have to move back to their previous base, start to mount an attack or create bring on more manpower, get all of the extra supplies in at that previous base before they can attack again. It's pretty much that simple. That's the analogy that I can give you when it comes to how these support and resistance levels work in a market with timing. Timing is the key here. So April is going to be a very important month. May is also going to be a very important month, but we're going to know sooner rather than later how much further we have to go and whether we're going to be mounting that attack above the support or below that support. So my thoughts for April, I think we have the potential to do 10 to 25% from our open price. And so why I say that? Well, the next level is at 31.5, 32,000. So that's about 13% away. And the tops, I think we could reach somewhere around that mid 30s, which are also very significant levels. You can see back here, they were previous supports as well, where the candles were closing on the monthly. that brings us up to about 24.5%. So somewhere around that sort of 10 to 25% within April and potentially May. I do think April has the potential to go higher. It may not be a green month, but it looks like it does have the possibility to be a green month. We'll have to see how it responds to those resistance levels in around the low to mid $30,000. As for the quarter, which we just closed out yesterday, up 71.77%. That's the highest quarter we have seen since the bull market in 2021 and also in late 2020. Prior to that, the next highest point was in 2019 when we were just starting to pull out of the accumulation area. So a pretty good move out of the accumulation zone so far. Prior to that, you had to go back to the bull market of 2017. So this is a pretty good sign from these low prices because we have already been down for an entire year. And the only other times that we've seen really good bounces are out of bull markets. So, these are the bull market bounces, which of course are going to be pretty strong, is this one here in 2019, which was basically the start of moving out of the accumulation. Things do get tricky. Each bull market is going to get trickier. Like you can see going back 2019, this is the bull market 2017. These are the moves out of the 2015 low, which also had another nice quarterly move up. So many things I think are pointing towards this being the start of the bull market. It's not going to be easy where it just goes straight up. I hope most people get that by now. I think we're going to have some tricky periods where it's going to look like the bears are in control again, potentially break some of the significant support levels, but not get as far down as the previous accumulation zones between that sort of 15 and 25K. I definitely think this next part is going to be very tricky and it's going to last many, many months. As we've seen with BTC over the course of the history, each bull market or getting out of the bear market low has become more and more tricky to understand what's coming next. This part is very, very tricky. What we're in now is the easy part. Once we get a pullback, I think that next sort of 6 to 12 months is going to be very, very difficult to understand what's going on. 2017, or this is 2016, and that's a 2017 bull market. This area out of the bear market was way easier to understand what was going on. You had an easy stair step up, sideways, up, little way down, but still above the previous top, up, tiny rejection, up, tiny rejection, and the bull market's on. Hopefully we get something like that. That would be absolutely amazing, but we could go through something a little more tricky and get even trickier than what it was in 2019 and 2020. Smash up that like for the green plants and white t-shirts and the green signals that we are seeing getting posted time and time again for the bulls in Bitcoin, on the NASDAQ, on the S&P 500. I hope you're able to start putting these pieces of the puzzle together for yourself. If you're enjoying the content, you know what to do. Like and subscribe. Join us over on TIA Premium as well. And for a limited time, for the Aussie guys, SwiftX are doing a double on their deposit bonus here of $20 free BTC. I'll see you guys at the next video. Have a fantastic weekend. Let me know in the comments what you're getting up to this week or this weekend, and I'll see you at the next video. Till then, peace out.